Alright everyone, let's break down this trade I took on the 15-second chart. Now I have to say that this ultra short time frame has been my go-to lately, and honestly it's been actually better than 1 minute and 5 minute when it comes to spotting high probability setups with high precision. Looking at the NQ action here, it was practically, in my opinion, begging for a pullback as price, as you can see, tried to hit that prior high at 805, but got rejected. Then came the rollover with conviction. I say with conviction here because if we switch to the 1 minute chart, we can clearly see this 20-point rejection wick, which in my opinion marks the exhaustion of this attempted upside. Notice how price doesn't hesitate or even try to barcode a little bit. Instead, what it does is it just literally plunges straight down, breaking structure just above the 730 level here. Also, check this out. The volume spike on this dip was way heavier than the last decline. A strong sign in my view of distribution as the smart money started unloading. Keep in mind, guys, that when volume and price both increase, it means they are in harmony, suggesting in this case that supply will most likely continue to drive price south. So at this point, what we have here is a trading range that's pretty clear. It's pretty clear, with this double rejection wick move being the low and the upper limit marked by the previous high. Now the range identification here it's clearly important in my view because it gives us a solid framework for near-term price action. We are also seeing a bearish bias at the same time in the market thanks to a clear pattern of lower highs. Now this persistent, I should say, selling tendency or selling pressure, coupled with the price's failure to reach equal highs, usually signals weakening demand momentum. Then we have this abrupt reversal triggering a breakdown below the 740 support level. This breach, executed with significant volume and momentum as seen on the chart, not only confirms the bearish tilt but also suggests to me that downside risks are now amplified. This is further, as you can see, evidenced by the break-in structure just above the 730 level here. Another thing to note here is that whenever you see the market dip or puke lower like this, once the immediate supply has been exhausted, the price can actually rise quickly on lower demand that you might otherwise expect. And that's because after a nosedive, the market is almost entitled to a relief rally, which means that this surge is nothing but an adjustment within a bigger downtrend. And that's obviously another strong bearish sign that you should consider if you are thinking of pulling the trigger short. So after we reverse down here, we see the price attempting to push through the 730 structural level, which is now flipped to resistance in a classic break and retest pattern. Now at this level, we also see a series of bearish order blocks already formed, with one particularly strong block at the 730 level, adding, in my view, substantial technical weight to this area of interest. Now, guys, at this point, for me, it goes without saying that this confluence reinforces my bearish bias and prompts me to enter the market short. Again, you have to understand that the key to finding such trades is to first identify and then target key levels in the chart, obviously using strong price action patterns such as order blocks, particularly sequential ones, which obviously indicate where major players are active, and structural breaks, which, as we know, signal shifts in market trends. Now, if you focus on such well-structured or well-defined high probability setups, you can rake in while minimizing risk rather than guessing the market's direction, which is obviously or definitely a no-no in trading. So bottom line, for me, the 726 level was that critical point that represented a solid confluence zone where multiple technical signals aligned perfectly. And again, the formation of these order blocks, which are a clear indication of market manipulation prior to actual distribution, along with the structural break, which by the way here also qualifies as a supply zone, played a major role in my entry. And as you can see, the trade was spot on with almost no drawdown. And by the way, guys, if you found this trade breakdown helpful, don't miss my next video where I'll be discussing similar setups and strategies. Alright gang, thanks for watching, and as always, hope to catch you all in the next one.